The Residence Nil Rate Band was introduced on the 6th of April 2017. When it was introduced, it was set at £100,000 and it increases by £25,000 each tax year until it reaches £175,000 by April 2020. The important thing to bear in mind, however, with the Residence Nil Rate Band is that where the total estate exceeds £2 million, it will be tapered. Essentially, the amount of the Residence Nil Rate Band will be reduced by £1 for every £2 where the estate exceeds the £2 million threshold. It's important to know that even where death occurred before the 6th of April 2017, individuals would not have used their Residence Nil Rate Band. However, it will be available for transfer to, say, a surviving spouse. In addition, special rules apply where an individual may have sold their property and moved into a slightly less valuable property, or moved into a nursing home, for example, after the 8th of July 2015. In these circumstances, a special downsizing addition applies. Now, there are very complicated rules in relation to calculating what that downsizing addition will be. However, we've got lots of examples available on TechLink. The Residence Nil Rate Band, as I said before, is available for deaths occurring on or after the 6th of April 2017. It essentially applies where the deceased left a share of a home or an interest in a home to direct or lineal descendants. For these purposes, direct or lineal descendants are essentially children, grandchildren or other remoter issue, including their spouses, widows and widowers. And for the purposes of children, you would also include any stepchildren, adopted children and foster children. Finally, you would also need to take account of any children whereby the deceased had been appointed guardian while they were under the age of 18. Direct descendants have to have inherited the property on the death of the deceased. That may be via their will or under the laws of intestacy or by other legal means, for example, survivorship. In the situation where the property is left upon, say, discretionary trust, in this situation, the Residence Nil Rate Band could well be wasted. So it's very important to take account of how that inheritance is happening. In a situation where an individual leaves the interest in the property to a trust which is something like an immediate post-death interest trust, in these scenarios it would usually be left for a surviving spouse or a surviving civil partner. In this case, the property will pass exempt to that person. And essentially, on second death, just like the same rules applicable to the transferable nil rate band rules, it will be possible for that surviving spouse or civil partner's executors to make a claim to use the Residence Nil Rate Band. They do have to make that claim within 2 years of death. It's paramount that you consider whether or not the client's wills leaves a share in the property to a particular individual or whether it's left upon trust. As I said earlier, there are situations where the Residence Nil Rate Band could well be wasted. So our advice to you would definitely be to review those existing wills and ensure that they're drafted in a way to make use of the Residence Nil Rate Band. Finally, there is copious amounts of information within the inheritance tax planning section on TechLink, which goes through examples of things like the downsizing provisions that I briefly mentioned, as well as issues with trusts if they were created in lifetime or on death as regards to using the Residence Nil Rate Band.